Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This is where you get everything you need to know in 90 seconds at 9 o'clock with news investors see warning signs. The US economy is losing its mojo, the US and China are having trouble striking a deal, and both the IMF and WTO are warning that global trade is wavering. Firstly, US consumer debt growth dropped sharply and unexpectedly in February in data released by the Fed. The flow actually dropped more in February than it rose in January in an unusually large reversal. The US non-farm payrolls survey for March reported a gain of 196,000 new jobs, which was just ahead of expectations. Unfortunately, this didn't make back any of the very poor February results, which only brought an insignificant revision this month. Factory jobs shrank, as did trucking jobs. Healthcare jobs are where hiring is at this latest quarter. And the US economy is still growing, but the expansion is fading. The New York Fed estimate is that for the first quarter of 2019, it grew just 1.4%, and it may rise to 1.9% growth in the second quarter of 2019. The Atlanta Fed GDP Now calculation is slightly better at 2.1%, but falling. Both are similar to private estimates. The US President is now calling for the Federal Reserve to cut interest rates and bring back QE to stimulate their economy. It's actually a white flag for the supposed power of corporate tax cuts. And Canada reported an unexpected drop in employment in March, although most other metrics remained unchanged. The US-China trade talks seem to drag on, and the China-EU talks seem to have hit a stumbling block on questions of access by EU companies to China's markets. And while we reported last week that new German factory orders took an unwelcome decline, new data out shows that factory production came in February at better levels than were expected. And over the weekend, the WTO published its first ruling about claiming national security as a reason for imposing tariffs, setting a legal precedent that will lead to a likely clash with the American administration. The case involved Russia and the Ukraine, but it concluded that the WTO does have jurisdiction in these types of disputes. In Australia, a top IMF official is reported to have said Australia's housing market contraction is worse than first thought, and the RBA was likely to cut interest rates in the next few months. US Treasury 10-year yield is little changed at 2.5%, but that's 9 basis points higher than this time last week. Their 2-10 curve is wider at 18 basis points, and their negative 1.5 curve is narrower at 8 basis points. Gold is unchanged at $1,291 an ounce, and US oil prices are firm, now just on $63 a barrel, while the Brent benchmark is at $70 a barrel. And the Kiwi dollar is also a little firmer this morning to start the week at 67.3 US cents, but that's about a cent lower than this time last week. On the cross rates, we're at 94.8 Aussie cents, and against the euro, we're at 60 euro cents. That puts the TWI at 72.1. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.